So housing crash headlines are everywhere right now, but Lincoln, Nebraska isn't showing the same warning signs as many major U.S. markets. So what's actually happening here in 2026? Well, if you've searched something like Lincoln, Nebraska housing market crash 2026, you've probably seen a lot of conflicting information. Some people saying the market is about to fall apart, others acting like nothing has changed at all. Honestly, the reality is somewhere in the middle. So Lincoln's market is definitely feeling the effects of higher interest rates and affordability pressure. Buyers are definitely more cautious than they were a few years ago. People are taking a breath before making decisions now, and so homes aren't flying off the market in one weekend in the way they sometimes did during the peak frenzy years where people felt like they had to make a decision almost immediately. But at the same time, Lincoln also isn't behaving like a lot of the overheated markets you see in national headlines. So in this video, I want to walk through what's actually happening in the Lincoln, Nebraska housing market in 2026, why it feels different here compared to some other parts of the country, and what buyers and homeowners should realistically expect moving forward. Because what most people don't realize is national housing headlines don't always translate well to local markets, especially markets like Lincoln. And if you're thinking about moving to Lincoln, Nebraska, or you already live here and you're trying to make decisions, understanding that local context matters a lot. The first thing to understand is that Lincoln never had the same kind of explosive run-up that a lot of major Sunbelt cities experienced during the pandemic years. You look at places like Austin, Phoenix, Tampa, parts of Florida, parts of Texas. Some of those markets saw extremely rapid appreciation in a very short amount of time. Investors flooded in, builders ramped up construction aggressively, remote work shifted migration patterns almost overnight. So Lincoln really didn't experience that to the same degree. Yes, prices went up here too, affordability definitely changed, but Lincoln's growth was generally slower and more tied to local fundamentals. And that really matters now because markets that rise very quickly tend to be more vulnerable when conditions shift, like higher rates hitting harder, oversupply becoming an issue, people pulling back faster. So Lincoln's market has historically been more steady, not immune to change, but less dramatic than some of the bigger boom-bust markets. It's not exciting or flashy, just steady. Honestly, that's one of the reasons a lot of people choose living in Lincoln, Nebraska in the first place. People moving here are often looking for stability. They want predictable neighborhoods, reasonable commutes, lower volatility, and a lower cost of living compared to bigger metro areas. Lincoln tends to attract people who value consistency more than speculation, and that doesn't mean prices can't soften here. I think that's important to say clearly because they can soften anywhere. There's a difference though between a crash and a market slowing down, and so right now what Lincoln feels more like is a normalization period. And that means buyers are more payment sensitive because rates are still much higher than they were a few years ago. Sellers can't just toss a house on the market at any price and expect multiple offers immediately. Some homes may sit longer, especially if they're overpriced or need work, and those are, of course, connected. Well, that's happening, yes, but that's very different from widespread panic selling or massive inventory spikes. Inventory is one of the biggest reasons the Lincoln, Nebraska housing market still feels relatively stable. Even now, Lincoln generally doesn't have an overwhelming amount of inventory compared to a lot of larger cities. There are still a lot of buyers competing for well-priced homes in desirable areas, and especially neighborhoods that might have established housing stock, reasonable commute, access, strong schools, and so on. Well, what's interesting is that the psychology of the market has changed more than the fundamentals. A few years ago, buyers were afraid of missing out. Well, now buyers are much more concerned about making the wrong financial decision or stretching too far on that monthly payment. Well, that creates a very different feeling in the market. So people take longer to make decisions, they compare more options, they negotiate harder, they wait to see if rates will move. And honestly, that's probably healthier long term. The frenzy period wasn't sustainable forever anyway. And another thing people that are searching for Lincoln, Nebraska housing market crash 2026 should understand is that Lincoln's economy is structured differently than many boom and bust cities. So Lincoln isn't heavily dependent on one sort of explosive or influential industry. You have government jobs, healthcare, education, insurance, manufacturing, local business, and the University of Nebraska-Lincoln, along with other universities and colleges. So that's a diversified employment base. Can create slower growth during good years, but also means resilience during uncertain times. Again, steady, the word you hear a lot when people talk about Lincoln. So now if you're thinking about moving to Lincoln, Nebraska right now, I think one big mistake could be assuming that national trends automatically apply at the same level. So if I talk to people who are relocating from higher coast cities, as I do on the regular, they can tell it's different here. Not just the housing market pace, but life in general. Now, one thing I do think buyers need to pay attention to in 2026 is monthly payment reality. So even if prices stay relatively stable, affordability is still a challenge because of rates. And sometimes people focus too much on headline prices while ignoring payment shock. So a home that felt affordable at 3% interest feels very different at current rates. That's why some buyers are waiting, not necessarily because they believe Lincoln home prices are about to collapse, but because they're trying to balance monthly costs with overall lifestyle. And honestly, that's reasonable. So the good news though is that buyers today generally have more room to think, which is a good thing. They can inspect homes more carefully, negotiate in many situations, compare neighborhoods instead of rushing into the first available property. Now that's a much different experience than the peak frenzy years. So for sellers though, expectations do matter. And I think one of the biggest disconnects right now is that some homeowners are still mentally pricing their homes based on peak market conditions. So buyers just aren't responding the same way anymore. And so there's an interplay there that has to be acknowledged. Homes in Lincoln that are still moving well are usually the ones that are priced realistically, presented well, and in areas people already know that they want to be in, especially neighborhoods that have strong long-term appeal. So there's a lot of popular neighborhoods in Lincoln that have established areas near parks and schools. They continue to draw attention. Homes with functional layouts and updated major systems still stand out because buyers are more cautious about renovation costs now. People are thinking a little bit more practically about monthly home maintenance, insurance, commute, fuel prices, gas prices. People are paying attention to the whole picture. That practicality, though, has always been part of Lincoln's identity. It's definitely not a market driven by luxury hype or a trend chasing. People care about value, stability, and livability. That's part of the reason why the cost of living in Lincoln, Nebraska continues to attract relocation people from more expensive regions. So does that mean Lincoln's free from economic pressure? Of course not. If rates stay elevated for a long time, affordability pressure continues. If the broader economy weakens significantly, that can impact confidence everywhere. But a correction and a crash are not automatically the same thing. So right now, Lincoln just looks still like more of a market adjusting to a different environment rather than collapsing. And it's really important to make that distinction. I think it matters, especially because fear spreads very quickly online. People see dramatic thumbnails and headlines about housing markets crashing nationwide and assume it's happening from coast to coast, every city following the exact same pattern. But real estate has always been very, very local, and Lincoln's story has generally been different from the bigger boom and bust markets that might grab that attention. Another thing people sometimes overlook is demographic consistency. Lincoln still tends to attract a pretty steady mix of students, healthcare professionals, university employees, remote workers, and people leaving more expensive areas looking for a calmer pace and a little more breathing room, both literally and financially. That steady demand base helps stabilize the market over time. Again, it's not explosive growth, but steady demand. And if you're deciding whether to buy here, I think the better question isn't, will Lincoln crash? It's probably more like, does buying make sense for your timeline, your payment comfort, and your long-term plans? Period. Because if someone plans to stay in Lincoln for several years, likes the lifestyle, and buys within their means, short-term fluctuations become less important. But if someone is stretching financially, hoping for rapid appreciation, or expecting 2021 style conditions to return quickly, that's where expectations may need adjustment. Honestly, that's true almost everywhere right now. So the market has changed. That's without a doubt. The easy money environment is gone for now. People do have to think more carefully, period. But careful markets are not necessarily unhealthy markets. Sometimes they are just more sustainable. And what's wrong with that? So when people ask me whether Lincoln, Nebraska housing market in 2026 is crashing, my honest answer is no. It doesn't look like a crash market. Not to me. It looks more like a market slowing down, recalibrating, returning to normal conditions after a few years. Some homes will sit longer, some prices may soften, buyers will negotiate more, but the underlying characteristics that have made Lincoln relatively stable over time are still largely here. So steady job base, measured inventory, consistent demand, reasonable pace of growth, and honestly, for a lot of people, that's exactly what they're looking for. So, now, does Lincoln fit everyone? Well, no. But if you're looking for explosive appreciation, ultra-fast growth, or highly speculative opportunities, Lincoln probably isn't that kind of market. But if you value predictability, lower volatility, manageable daily life, and a more grounded Midwest environment, that's where Lincoln tends to appeal to people. So especially families, remote workers, healthcare professionals, and people relocating from more expensive areas who want a slower pace without giving up access to city amenities. And that's why these national housing conversations need a local context. Because the experience of living in Lincoln, Nebraska is different than living in markets that experience much more extreme cycles over the last several years. Well, if you're thinking about moving to Lincoln, Nebraska, or just trying to get a clearer picture of what the market actually feels like here right now, that's what I try to do on this channel, is just give a realistic perspective on the city, the neighborhoods, and what everyday life here actually feels like beyond the headlines. So, I'm Ryan Downing, and I try to be a bit of a digital mayor for Lincoln here on YouTube, helping people get a clearer picture of the city before they make a move. So I appreciate you being here, and I will see you in the next one.